Your Capital One credit limit is low, and it's probably been low for a long time. You can have solid income, a great FICO score, perfect payment history, and a years-long relationship with Capital One and still only be approved for small limit increases, or even worse, denied altogether. Listen, you're not alone. Just look in the comment section. Over the next couple of days, it will be flooded with people who had experiences eerily similar to yours. This happened to you because of a secret process called bucketing. Now, what is bucketing? Now, let's say you apply for a Capital One credit card. What they do is they group and sort your card into a category based on your credit score. They call these categories buckets. These buckets are representations of different levels of credit risk. Any Capital One card you have is part of these predefined buckets. Okay, so what happens when your card is bucketed? At the moment you're approved for a card, Capital One decides which bucket your card belongs in. This bucket is important because it sets the maximum amount you can borrow on your card and how much this limit can go up in the future. It may seem like your card is stuck in its bucket forever, but the process behind this isn't exactly clear to everyone. There are patterns that hint at these buckets. We can guess, though, that there are probably buckets for different credit levels. So before you sign up with Capital One, it's really important to already have good credit established, because it can mean the difference between starting out with a $15,000 limit and the chances of quick increases are starting out with a $1,000 limit and being sentenced to $100 increases every few years. That's just another reason it's important to keep tight control over your credit report, and that's especially hard today with financial fraud going wild across the country. It seems like every week we hear a sad story of someone losing their life savings because of scammers. A recent study found that identity theft happens every 14 seconds in America. That's why I decided to try out Aura, the sponsor of today's video. And wouldn't you know it, they immediately found 30 reports of my personal data out there on the dark web. I kept using the service since they give me instant alerts of any changes to my credit report. They recently sent me an alert when I opened a US bank card for my business. So if someone wanted to open a new credit card in my name, I'd instantly know about it. They even provide identity verification monitoring, home auto title monitoring, and they monitor your social security and personal data. You can hit the link below and check them out. You'll get a 2-week free trial of the service, and just go to aura.com/Cal Barton. Now you might wonder why Capital One is playing this bucketing game that can confuse and upset their cardholders. I'll show you a few good reasons why Capital One might be using the system. First, we gotta talk about Comet. That's the Capital One Multi-Asset Execution Trust. The trust can be seen as a pool containing various financial assets, specifically loans provided by Capital One to its credit card holders. These assets are transformed into asset-backed securities. As credit card holders pay their bills, that money along with their interest is collected in this pool. Comet then creates portions from those asset-backed securities, often referred to as notes, and sell them to investors. These notes are divided into buckets according to risk and potential returns. As the pool receives money from credit card payments, it's used to repay investors who own the notes, along with healthy profits. There's about 5 reasons I could come up with why Capital One would decide to issue these notes to investors. Number 1 is shifting the risk. Asset-backed securities are like a safety net for credit card companies. They help these companies transfer the risk tied to their credit card loans to investors who buy these securities. It's like moving these loans off their books, meaning they don't have to keep as much money on hand in case things go south. This can save them quite a lot of cash. Number 2, more funding options. Asset-backed securities open up a whole new world of potential investors. By selling securities backed by their credit card loans, companies can attract a variety of investors with different risk appetites. This can make it cheaper for them to borrow money. Number 3, better cash flow. Asset-backed securities are sold in a market where they can be bought and sold again. This helps credit card companies turn their loans into cash by selling them to investors. This extra cash flow can help companies rely less on pricier ways of funding, like short-term loans or lines of credit. Number 4, money in, money out. The cash flow from credit card loans is predictable and can be structured in different layers with varying levels of risk and return. This helps companies plan their finances better and cater to different investor tastes, making these securities more marketable. And number 5, funding credit card companies can tailor these securities to suit the tastes of different investor groups, getting them to accept lower returns for specific levels of risk. This can lower the overall funding cost. So why does this stop you from increasing your credit limit? The process of securitization, where credit cards are bundled and sold as asset-backed securities, involves a lot of factors that can make it a real challenge for people in these buckets to move to better buckets with higher limits. Number one, bucket composition. Credit card debts that are grouped together for investment purposes are often sorted by similar features like credit scores or risk levels. These groupings are made to provide investors with reliable cash flow. So if a person's credit score or risk level changes, they may not fit into their current group anymore, which makes it hard to shift them into another group. Number two, size and liquidity. Creating these groupings often involves lumping together a large number of assets. This is done to spread the risk out to make the process more efficient. However, setting up these groups can be complicated and expensive, so it may not make sense economically or practically to constantly create new groups or just existing ones for individual credit card users. Number three, legal and regulatory considerations. Grouping and selling credit card debts have to follow certain laws and rules. These laws are there to protect investors and to make the process more transparent. Following these laws can limit the ability to move individual credit card holders between groups. Number four, investor demand. The demand from investors can impact the creation of new groups. If there's not much demand for certain types of investments, or if what investors want changes, it may be hard to set up new groups to suit specific types of credit card users. Now, how do you know what bucket you're in? Firstly, the starting credit limit you're given is a big clue. Let's say when you got your card, your limit was somewhere between $500 and $1,000. This generally means you're likely in a lower level bucket. Another telltale sign is the size of any credit limit increases you've received in the past. For instance, if the increases were only $100 each, it's a pretty clear sign you're in a lower level bucket. Also, if you've been consistently denied increases for more than a year, despite having good payment history, or if you have much higher limits with other credit cards, but Capital One hasn't upped your limit yet, both these scenarios hint at you being in a lower bucket. Another sign is the type of card you got approved for. Did your Quicksilver card come with a sign-up bonus or not? I got approved for a Quicksilver card back in 2019 for $15,000, and it came with a $200 welcome bonus along with a 15-month 0% APR period. See, Capital One wasn't the first card I applied for on my credit card journey. My FICO score was already well into the 700s at that point, so I was able to be placed into a more favorable bucket. A little less than a year ago, I was able to upgrade that same card into the most premium travel card that Capital One has, which is the Venture X, which I highly recommend, and I'll leave a link to that below. But here's the thing, if you didn't get any extra perks when you signed up, it's likely that Capital One placed you in a mid or lower tier bucket. And how do you get out of your bucket? There's only one real way of escaping your current bucket, and that's to sign up for a completely new Capital One card after you have successfully improved your credit score and profile, which I know you don't want to do at this point, but it's truly the only way. What ends up happening is Capital One will send you back through their automated bucketing process and remove the locks and limits that were on your previous account. Also, through a lot of testing, others have found that simply product changing into another card won't change a thing because the entire account is bucketed. So any card that you swap between will still retain the same limits. Others have seemingly found luck escaping their bucket in a different way though. They just wait for years. I'm talking 4 to 5 years at least. They found that Capital One will just randomly choose to increase their limit by a massive amount suddenly, like going from a $1,000 limit to a $5,000 limit. There's no explanation, no rhyme or reason by Capital One. The person will just get an email notification of the increase and most likely roll their eyes because they've since moved on to better rewards cards with higher limits. Here's what I say. Before accepting an offer from Capital One, check the limit, and if it's low, you may want to think twice before signing up because the low limit you see is probably what you'll be stuck with for years to come. On the other hand, if you have excellent credit and you know it, go for the Capital One Saver One card or the Venture X card. You can even do both, because those two create a powerful bifecta that earn higher rewards in like 8 different categories like travel, dining, groceries, and entertainment. You guys definitely got to check out my credit limit increase cheat sheet. And here you can see how I was able to increase my Capital One limit twice in 60 days. Thank you for watching.